Hello, everybody. Welcome to the Trading with Ashley show. It is a rainy day here, so we're still enjoying being outside, though, after all that trading. Speaking of all that trading, wow, we had such a great day in the community. We love a red day, and we got it today. We had a little bit of a pullback. I called out over 24 trades. So if you've joined me last week and you are part of the community, you were ready to go today, we were able to produce over $8,000 in premiums. Now, all those trades don't expire yet. There's still risk associated with them. But if we have just 80–90% of them expire worthless, that is a lot of money that we were able to create on a good, solid red day. And once you learn to sell options, you're not afraid of the red, you actually embrace the red. And that's what we did. In fact, if you took the free play that I offered you on my Sunday video about Palantir, if you opened that trade this morning, the one that expires this week, you would have been like us in profit by over 50% in just a few hours. So we opened the trade this morning. We were in profit by 50% in a few hours and closed it out. Now that money can be redeployed on another stock this week. So that's the way you do it. You can do this. You just need to go in boldly and make some decisions on stocks you would not mind owning at a discount. That's what selling puts is all about. But today I want to talk to you about a few things. One, I know many of you have heard, because I'm getting your questions, about the challenges we do within the community. We had a very successful $25,000 challenge, and I did a video on that yesterday. But what I wanted to tell you is I am going to be doing a new challenge in the community. It's a $30,000 buy right challenge. And the buy right is basically like a call. You're selling a call, but you're just buying the stock and then you're selling a call immediately after buying the stock. But there's a certain criteria you want to look for if you're going to take that trade. And good news for you, I am doing a free webinar this Friday night to explain what the buy right is, how it works, and then how to select the right entry. It really is a safer way to trade if you grab a stock that has great momentum. So I'm going to share with you all the secrets, but you want to reserve your spot. I announced this yesterday, and we're already 50% full on the spot. So go ahead and grab your spot if you're interested for this Friday night. That link is going to be in the description. But what I wanted to talk to you about today, the second thing is Sofi. So I have been looking through the big, beautiful bill that just passed, and Sofi stands to really be a gainer of some of the dynamics of the big, beautiful bill. And we enjoyed trading Sofi. I've done a lot of videos on trading Sofi. Sofi is wonderful for new traders because it's not very expensive. Now, it's getting more expensive because it is starting to rise. And of course, if you had the stock like we did, you're selling covered calls on it. But I want to take you into the computer and explain why they stand to gain from this new bill and what you can possibly do about it to capitalize on it. I know that it's frustrating when a stock takes off like Sofi and maybe you had a lot of it and you sold covered calls prematurely and it's blown through your strike price. Well, today I'm going to give you a little tip on what you can do to regain your shares if they're at risk of being called away. So I think you're going to like this video. Let's go break it all down. Like I just mentioned, we are going to dive into some exciting news for Sofi Technologies and why the new One Big Beautiful Bill Act could be a game changer for them. Let's break it down in Ashley fashion in a way that's easy to follow, and you will too see why Wall Street is President Trump's latest tax bill, which just received approval with the House vote, is shaking things up for student loans. The big deal here is that it puts some serious caps on how much students and parents can borrow from the federal government for college. Federal loans have always been the go-to because they're predictable. They have the same terms, the same conditions. They're backed up by good old Uncle Sam. But now, with these new limits, a lot of students, especially those in the pricey grad programs like the law or med school programs, they might not be able to recover their costs with federal loans alone. And that's where private lenders like Sofi step in. So let's talk a few numbers for a minute. Under this bill, grad students are capped at $20,500 a year with a lifetime limit of $100,000. Professional students like future doctors or lawyers, they can borrow up to $50,000 a year, but only up to $200,000 total. Compare that to today, where grad students can borrow up to $138,500, and some professional students can hit $224,000. Parents are also getting squeezed. They can only borrow $65,000 per child, down from covering the full cost of attendance minus other aid. That's a big shift, and it means more students and families might need to turn to private lenders to bridge that gap. So, why is this great for Sofi? Well, Sofi is one of the biggest names in private student loans, and analysts are saying they're perfectly positioned to cash in. Some well known analysts put it like this: a lot of Sofi's target customers, think high earning grad students or professionals, won't be able to rely on federal loans anymore. They'll need private loans to cover those expensive programs, so Sofi is ready to step up and loan them the money. Of course, they get interest from that and any fees that come along with lending money. But wait, there's more. The bill could also spark a wave of refinancing. It's tweaking federal repayment programs, making them less attractive. And with debt collection kicking in, borrowers might face higher premiums. That's pushing people to refinance with private lenders like Sofi, who have a strong grip on the student loan market already. Now, Sofi, they have been preparing for this kind of moment. Their CEO, Anthony Noto, said back in April that if the government ever tightened federal lending, Sofi would be ready to, quote, capture that opportunity. And they've got the track record. Sofi started out refinancing federal student loans at better rates, and even though they've shifted focus to other areas like fee-based services, they're still all in on lending when the demand is there. Noto's big on making Sofi the go-to for major financial decisions, and student loans are a huge part of that. So what's the bottom line? Now that this bill has become law, Sofi could see a big boost from more students needing private loans and others refinancing their debt. It's a chance for them to flex their muscle in the student loan space. So what do you personally think of this bill and Sofi's potential? I really want to hear your thoughts in the comments. Are you buying more? Are you holding what you have? Are you selling covered calls? Or are you just going to let this run? Let me know what you think. Now let's take a look at what you might be able to do if you have covered calls on Sofi and you've blown through the strike price. And so right now I am looking at the action today. We were up 3.61% today, and that is putting Sofi at the top of its Bollinger Band. And you can see right here on the RSI, we are well over 70, and I'm looking at the 3-month band. So when this happens, typically there is a pullback, even if it's a slight pullback. So one thing that I might consider doing, if let's assume I have like an $18 covered call, and we've blown through that right now, we're sitting up at the 1924 area. But if you're of the belief that Sofi can keep running, what you might consider doing is going ahead and rolling your $18 call on any red day that we have next. If we have one tomorrow or Wednesday, go ahead and roll that call up and out. Try to get up to $20. If you can get up to $20 for a credit, then that leaves you a little wiggle room. Now, what I would do with this, if I were able to, let's say, push out till August up to $20 with a credit, I would use the next couple of weeks to reestablish my position and not put covered calls on those new positions. As long as I am buying Sofi under $20 for reestablishing my position, I can let the $20 calls take my shares because I've reestablished below that, so I'm still ahead. So that's one thing you can consider doing, and Sofi is a stock that's not so expensive that is unreasonable to think that you might be able to come up with the funds to reestablish your position and then let the shares go that have a covered call, as long as you can get it up above where you're reestablishing. In this case, my $20 example, push to 20, out a little bit further, go ahead and let those go, but reestablish your position before we get to that $20 mark, and then you should be good to go. Okay, I don't want you to miss not one play. They are making everybody some wonderful, great money, and we all enjoy money, right? So make sure you are subscribed to this channel and go ahead and share it with somebody that wants to learn. People keep telling me that they love the way I teach because I talk in very simple and plain English and they can understand what I am trying to share with them. So I would love for you to share this video or my series of videos with anyone that may want to learn how to trade options for a living. Remember, if here with me at Trading with Ashley, there is no trader left behind. And I am going to go ahead and leave that video where I explain everything about the buy right up here in the corner. You can see that video right here.